Hey everyone, John Henry here, Slingshot Futures Trading Group. Thanks for joining me in today's video. Before we start, take a second to give the video a like, subscribe to the channel, and make sure to click the notification bell icon so you don't miss our next live stream or next video launch here on YouTube every day. Make sure you start your day off the right way. Don't forget your free morning brief that's waiting for you at ssftg.com/brief. In the top left, you can click on morning brief to jump into that. That's where you'll find all of our major DP levels right up here at the top, as well as a quick technical overview for the major 6 markets that we look at. The NASDAQ, the S&P, you've got gold, crude oil, the euro, as well as Bitcoin. Maybe you're looking to get a full game plan for the day, week, or month. Check out the join button below. Level 1 subs get a brand new members only video every single morning going over the major 6 markets and a game plan for the day. In addition to that, once a week, I launch a weekly brief, and of course, once a month, we have our monthly brief as well. Of course, all members gain access to our private Discord chat server, and if you really want to get into the nitty-gritty, check out the live analysis room for level 2 subs, where you can see my screens in real time during the New York Stock Exchange Open. You can ask questions and interact with the other members, as well as bounce ideas off myself and everyone else. It's a fantastic environment, and I would love to see you in there. All right, and now on to the really fun stuff, the topic for today. My top 3 favorite ways to trail a stop. There's a lot of different ways to take profit. There's a lot of ways to trail stops. You can trail it with moving averages and indicators and ATRs and blah, 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 blah. The list is 1.5 miles long. But when it comes to trailing a stop, there are 3 ones that I just kind of always use. They're my defaults, my fallbacks. If everything else fails and I just need to really quickly trail my stop, these are the ones that I'm going to fall back on. The first one is a candle trail, and that can be a candle trail, a 2-candle trail, a 3-candle trail, etc. Confirmed swing trails are really good for longer term ones. And then you've got volume trailing, and that's more along the lines of the faster, kind of the scalping side of things. So candle trailing, what is it? Right? Well, I mean, the name kind of gives that one away a little bit, but it's basically just the act of trailing your stop along with a previous candle in the sequence. And the important part here is that you need to ensure that you're trailing under or above, whichever way you're going, the correct candles, because really the big thing that you can run into is inside bars and dojis and all these other things that can really kind of mess with you. So you're only trailing confirmed candles. Those are the big ones, and you're moving the stop after the confirmed candle has completed, not during while the candle's moving around. You gotta wait for it to finish. But what I'm looking to do is I'm utilizing, oh, these are some thick candles. Let me zoom these out a little bit here. What I'm looking to do is looking at the candles themselves. If I were long, as an example, just for ease of use, let's say I went long above the bull bar and I'm looking for a way to trail my stop. How do I protectively trail my stop, but without giving everything back? So what I look to do is trail with the bull bars. I'm long, so I'm trailing bull bars. And what I want to do is decide on the type of trail that I want to do. Aggressively, maybe a little bit more relaxed, maybe really relaxed, give it some space. 1 candle trailing would be every single bull bar that's making a new high. So this bull bar is equal to the high. Good enough. Double top? Sure, stop can go underneath that. This candle is a bull bar and it's making a new high. Your stop goes under that. Bull bar making a new high. Your stop can go under that. Right there, it would have gotten taken out. Now, there are other times where, like here, this is a nice bull bar, but it is not making a new high, so that one doesn't count. This one does. Your bull bar right there, and you would trail your stop underneath. But here, bear bar, when that's not in the direction of the trend, I want to go long, I need bull bars to trail, so nothing changes. Your stop stays put. Get a bull bar at a double top, then it goes up along the way until it gets taken out there. And that's the 1 candle trail. You're trailing every single individual candle. Now, if you were looking at a 2 candle trail, you're just offsetting it. It's the 2nd candle back. So if we look at current market right now, and let's say as an example, I wanted to do a 2 candle trail to the downside. Well, my stop would be 2 candles back above the high of it, on the bear side. So it's the second candle that's in the sequence of making new lows. One candle making a new low, second candle, that's the one, that's the second one back. My stop goes above that. And as long as we are making new lows or my stop stays put, nothing changes. And we continue to measure along the way until something happens. Right there, we have a big bear bar. Now we can go 2 candles back. Wait a minute. The 2 candles back is down here though. Right? 1, 2. That doesn't help. I'm not going to move my stop negative. That wouldn't make any sense. So my stop stays put or can move above the high there. Your choice. If you move it above the highs, it's going to reduce the probability. The other caveat, you need to see the following candle actually trigger. It's got to go lower, right? Just because it's a bear bar, that's great, but it's got to at least go one more tick down. Otherwise, it's not proving anything. So that is the type of situation that you're looking at. You either got stopped out with a 2 candle trail there or a little bit further back. A 3 candle trail then, you guessed it, would just be going backward 3. There's 1, there's 2, there's 3. Your stop would go here. If you were at this one, this would be 1, 2, 3. Your stop would be above this. And the further out you go, the higher the probability, but the more profit you end up giving back as well. Don't defeat the purpose of a trailing stop by giving everything back. You got to make sure to at least lock in a little bit. But this is a surefire way where if I don't know, if I need to move fast and I need to get my stop in one of these locations quickly, this is one of the first ones that I'm always going to default to. Then we've got the next type of stop trail, which is going to be the confirmed swing trail. So confirmed swings are the major swings that are at the highs and lows, and they're the ones that make the overall market move. When you're talking about a trend and you say, oh, it's making higher highs and higher lows, those are the swings I'm talking about. The really obvious ones, not the super little tiny little itty bitty ones, but when I zoom way, way out, where are the obvious swings? That's an obvious swing, right? That's an obvious swing. That's what I mean. Now, a confirmed swing requires a couple different things. A confirmed swing requires and is set up by being the lowest point of a pullback or the highest point of a retracement, but we don't know that until it's actually confirmed by going back to the highs. Basically, what that means is I don't know that this is a confirmed swing low until it breaks back above the highs. Until that happens, I don't have a confirmed swing. Now, we can go backward a little bit, and you can also break this down because it does depend on how close or how far away you are. If you're zoomed in really, really close here, a confirmed swing might not be that big, and it doesn't have to be, because from this perspective, you're not looking way, way far out. Whereas if I'm looking farther out like here, well, some of these smaller little swings, they're there, but they might not be as big of a deal. So it is a little bit subject to personal interpretation, and that can be a little bit frustrating sometimes. But once you start getting the hang of the way that these sort of operate, what you're looking for are the obvious ones that are just going along with what you expect, right? We've got major swing high, major swing low, major swing high, major swing low, major swing high. Wait a minute, something changed. Well, how do we know that it changed? When it started breaking above the last confirmed swing. And once it starts breaking above the last confirmed swing, that's where we have some proof that, well, you know what, maybe this is actually a trend reversal, not just a pullback. And that's why I love using those. These are obviously way far out there. These are stops that you use on like a daily chart for a trade that you've been in for a month and a half, okay? These aren't the types of trail stops that you're going to be hanging on to with really, really tight moves, because they do tend to be really far away. They're big, big areas, but they're important areas because when they break, it shuts down the whole reason why the trade should be in anyway. And even if it does return back to where it was, it's more likely going to be a failure there when it gets back to that zone. And, well, the opposite side, those traders, they'll probably start buying it back up again if it were short. And then the final one is going to be volume trailing. And volume trailing, this is something that is on the much faster time horizon. This isn't something you're going to be using on a 15-minute chart, although you could. I'm looking at this more from a really, really zoomed in fundamental perspective of what's happening. Where are the orders coming in? Where are the orders flowing out? what all is happening, because this is where all of that volume can really, really help. Now, obviously, you're going to need something to be able to track volume, an order flow profile tool of sorts or something like that. But as an example, if I were looking to trail on the way down, looking at the overall volume, just looking at this top from this initial bear move down, the majority of the volume was here. Started popping back up and then broke down again. So we can further gain more information by going forward and seeing, yeah, that still remains the largest volume, but on the way, there's these little volume nodes. Now, these are easy to see after the fact, but if you look at them while the market's actually moving, they move pretty quick. And what you're looking to do with this is you're looking to trail along with this volume. So I'm going to do a play-by-play, and it's going to be pretty quick, all right? So you might have to kind of rewatch this back a couple times because this is moving very fast. But this is assuming, let's say I wanted to look for a continuation move to the downside, right? The buyers maybe are failing, or the sellers are maybe failing. This volume is where we can really determine what's happening. So I'm going to drag this all the way to the beginning, and we can start kind of nailing down what's happening. If shorts are in, we've got some good bearish volume stacking up at 27.50, more volume stacking at 26.50. Now see when it popped up right there, there's volume stacking. That would insinuate that this is still selling volume. Ooh, big order that just stacked up right there. More sellers trying to push back down, but now it's cracking above. That's a little bit of a problem. We have to watch this volume. Watch this volume at 29. They've got to get back above or below. And now it's starting to come back down, but look what's happening. See how the market's pushing down and the volume's coming in? That would give us an idea that that would be bullish volume. These are buyers coming in on this move down. We just saw another shift in volume, bigger volume coming in at 628, trying to defend this low. And see, now it starts rejecting back up. We're stacking in a few more orders in here. We're fighting. They're in a little bit of a fist fight. Who's going to win? Cracking below the volume. So if I were a short, I wouldn't want to see that get lost. Look at that. Big pop in volume again right there. So now volume's starting to stack up at the 28 quarters, and they're trying to pressure down. If sellers are going to be looking to trigger underneath this bear bar, they're going to want to see a lot of volume hit underneath. Spaced out, jumped right back up. Notice what it didn't have? No volume. Nobody on the planet sold it. Nothing. It went underneath it and there wasn't a soul. And then it popped all the way back up and found more volume at the highs. So it gave you a really big clue that if I were short and I wanted to see follow through and there wasn't follow through, ain't bad. No, get me out. That's a problem because now I'm seeing what I don't want to see. But you'll notice how fast that was, right? Take a second, calm down, right? Take a step back and breathe. You can get really enveloped in the current market when you're watching it moving like this. It's like staring at Las Vegas lights, right? This thing is all over the place and it's making sounds and it's fun to watch. This is where you've got to be very careful. The only time that I'm utilizing this type of price action is if I'm scalping, because this is the kind of price action that you would look for if you're scalping, or if I'm looking at a short-term, very short-term area that maybe I need to lock my stop into, or if we're coming into a big zone of support and I want to see buyers support this area, then I can zoom in and start looking at this. Be careful not to get lost in it because it's fun, but sometimes if you do it too much, it does more harm than good. So those are my 3 favorite ways to trail a stop. That's candle trailing, confirmed swing trails, and volume trailing. And all of them have a different location, a different context that's necessary for them to really fall into alignment. But that's why I have a few different ones that I always fall back on, because when the trend environment happens, I have a stop placement for that. If it's a range-bound environment, I've got a different stop placement for that. And it's a way that you can still make sure that you're trying to get as much out of the trade as possible without giving everything back and turning a fantastic winning trade into a losing trade. All right, well, that's going to do it for this one. I hope you found it useful, interesting, entertaining. And as always, if you have any questions, feel free to send me an email, jhb@ssftg.com. Until the next one, enjoy, rest up, and like we always say, stay safe out there, keep those stops in play, and let the winners run. Until the next time, we'll see y'all then. Thanks.